Hello, you're watching News.Markets Business Book Club. This week, we're reading an in-depth analysis of today's rapidly changing international energy markets. The energy world is flat, explores the investment opportunities from the end of peak oil. The book's co-author, Daniel Lacal, is here now. Hello, thanks for coming in. Now, your book is part history lesson, isn't it, and part financial guidance. So you kind of talk about it as a battleground, don't you? Explain what you mean.
Well, what we're seeing in the energy world is something that we also saw in the technology world a few years ago, which is the battle between disruptive technologies and commodity producers. So what we are seeing is that the fracking industry, the solar industry, renewables in general are making a dramatic change in the landscape of supply and demand that is also changing in a very important way, the way that we perceive not only price of commodities, but the risk of supply and demand.
So you think it's shaking things up like the internet revolution, like the dot-com boom?
Exactly. We talk in the book about what we call the energy broadband, is that vast amount of investments that have been undertaken in the last 10 years in particular to accommodate for a growth of demand and for a different view of what the energy world should be from both government policies and company policies that have completely shaken up that environment and improved dramatically the supply for everybody.
So do you think investors need to have a different view then if they're going to make profits in this changing energy environment?
Certainly. I think that investors should forget about the hyperinflation of commodities as an investment thesis and should start to think about all these disruptive technologies and what they're doing to peak pricing in particular. So while the energy needs of the world are going to continue to grow, we are also in an environment in which there is much more diversity of sources that will provide for that energy. And I think that investors should understand that multiple expansion, inflation in price, that things that we have traditionally been used to as a source of investment process should be taken away in favor of return on capital employed, on prudent analysis of investments and opportunities, and on risk of those technologies changing things dramatically.
It's tricky, though, to have that new, renewed focus when you see what's happening to oil prices at the moment. And what's your take on where they're going? How low can they go?
Well, I think that oil prices will continue to be weak as long as what we see happening with the oil revolution, the shale oil revolution in the US continues, because it's taking away the geopolitical premium that we used to attach to the oil price. On top of that, the US is now producing more than Saudi Arabia and Russia. So we can find a completely new environment. And I think that what changes is precisely what drives price up, is the fact that while demand and supply will continue to be robust, the pricing inflation is not going to be the same. As we have seen with gas prices, as we have seen with coal prices, what we are seeing in the oil market is not too dissimilar. So the world of higher oil prices for longer has gone.
It sounds like investors need to rethink the way they look at energy markets completely. Daniel Lacal, thanks ever so much. That's Daniel Lacal, the co-author of The Energy World is Flat.